W.D. Gann, the man, the myth, the supposed market wizard. Was he a genius who discovered timeless truths of the market or just another salesman pushing mysticism? Today, we're going to be breaking it all down. The most famous one of his tools, so-called 45-degree Gann angle, and exposing the real story behind the hype. All right, welcome back, everyone. Tom here from Park Avenue Trading, your chief dealer, giving you a lesson on a Saturday. Sit back, relax, learn something about markets. If you haven't heard of W.D. Gann, it's been a good little intro for you. If you haven't heard about him, like I said, it'll be a good intro for you. If you have, well, you'll probably realize what I'm saying is probably true. All right. So let's be real about this. There's plenty of evidence that Gann leaned heavily into the salesman role. His actually trading record is murky at best. Many researchers suggest that he made more money selling courses than he did trading. Does that sound familiar today or what? How many people out there got a great story, but they got no system, but they got millions of people following them. And, you know, there's no actually real evidence that they actually trade. That's about probably 97% of the people out there. Same in the 1920s as it is in 2025. Think about that, right? So a lot of his secrets were vague, mystical, and completely unfalsifiable. And yes, he tied his systems to astrology, planetary cycles, which makes him look even more like a salesman than a serious market technician. That's for sure. So we got a little bit of a flip side. Hang on, I'm gonna light my cigar. If you strip away the mysticism, okay, so he had some things. Okay, he understood time price symmetry. Now, here's the thing with time price. He said that the square root of price equals the time component. The square root of what price? I've studied Gann, and man, Gann's done nothing for me except give me a headache because he talked out of both sides of his mouth. That's just the way I look at it. Now, if you studied Gann, you might agree with me. There are some people though that are ardent followers of it. They're reading his book "Tunnel Through the Air" like it's like some magical Bible for trading. It's a bunch of hooey. But uh, so the time price symmetry, I really couldn't figure out. Square root of price equals time. So which square root of price? The daily, the monthly, the weekly? And if that's the case, if you're trading a 4-hour chart, how does it help you? I couldn't figure it out. So he also recognized that markets respected support and resistance. Okay. Um, and he had, proportional like divisions of prior moves. Like he would use 5/8 a half, a quarter move, 75% of a move, so he had all these different like measurements. So of course you're going to hit one eventually, right? I mean, so really there was, he, it was a foundation for technical analysis really as far as like Fibonacci was concerned. Okay, so it's not really anything of substance there, but he talked about round numbers also. And round numbers are very popular for you retail guys. I know that you go 144 the figure, 144.20, 144.50, 144.80, 145 the figure. These are all round numbers. They're not round numbers, they're prices. Round numbers occur in the marketplace, but they're nowhere near on every big figure. And if you want me to do a video on round numbers, the true round numbers of the marketplace from my 30 years experience, leave it in the comments for me, and I'll be happy to do it. I really will. I'll be happy to show you the true round numbers of the marketplace. So what about this famous 45-degree angle, the 1-by-1 line? It simply means that 1 unit of price for 1 unit of time. So in other words, if you define your unit is 100 pips in sterling yen, the 45-degree line raises by 100 pips for every daily bar. If price trades above that slope, it's outperforming, the standard pace, and it's actually showing momentum. Okay, if it trades below it, it's showing it's lagging. So the catch is on modern charting platforms, the 45-degree line is drawn by pixels. It isn't really, again, 1-by-1. So you have to scale it so that time and price are equal to the units. That's why so many traders have trouble with it. And I'm going to break it down in the chart, and I'll show you how to really easily do it in the next segment. 3 minutes, you'll be able to do it. So why, if you don't do this properly, a lot of traders will dismiss it as nonsense because the chart moves and the 45-degree angle changes. So it's not locked. It needs to be locked. Okay. So here's my verdict. As a system seller, yes, Gann leaned heavily into mysticism and secrecy, and a lot of it looks fraudulent to me. But as a market observer, he tapped into some real truths, proportional moves, the cycles. I mean, cycles, 50-year cycles, 100-year cycles, who cares? 50-year cycle, I'll be 110. Do I really care about a 50-year cycle? Do I really care about a 20-year cycle? Do I really care about a 10-year cycle? No, I care about the next 10, 15 minutes. That's what I care about. Okay. So he had that round number psychology. Again, it's not on every big figure. Round numbers occur in the marketplace. Yes, there's only a certain set of them. If you want to learn them, leave it in the comments. I'll be happy to do it. So if you strip away the psychology, the pyramids, the Bible codes, what's left are early versions of modern technical analysis, really. Retracements, measured moves, and somewhat time cycles. I don't really buy into the time cycle thing. So the useful parts, we can actually prove them statistically. So the rest is probably theater, really, just to sell courses back in the 1920s and 30s. So without further ado, we'll get into the chart work with the 45-degree angle. I'll show you how to anchor it, and you can use it. You can observe it for yourself. But you're going to definitely need a trigger. You're going to need a trigger. You're going to need like a 3-bar trigger, a consolidation setup, on both sides of the marketplace, where I go over that in my boot camp. So get in my boot camp where we talk about, consolidation phase, what a consolidation phase is, and how you could use the 45 to the best of the ability. All right, so I'll see you in a second. I'll come on over to the TradingView chart and show you how to do it on TradingView. Cheers. Okay, was Gann a charlatan or was he genius? Now we got to separate the good story from actual good system. Okay, so on TradingView, and I only know how to do this on TradingView. Okay, so how you would do this, you need to lock the scale and time, price right here. So you'd come on over to scales and lines, and you'd lock the price bar ratio right there. You'd lock it. Okay, and once you do that, the simplest way to get a 45 is to actually put up a Gann square. So you'd pick a Gann square, Gann box, right? And you would go from a bottom pivot up to a top pivot, and now you got your box. The easiest way to get a 45, true 45, is draw a line from the 0 point all the way up to the 1. This is a square. So we're cutting it right in half. That's a 45-degree angle. That's the simplest, best way to do it. Now, as you can see, you could have used this top as well, right? And the 45 would have moved down a little bit. But let's just say this is the marketplace we're looking at right now. So you notice that when we did reach this top and we broke the 45, market came down, but it didn't really fall out of bed, okay? It went down to the 50% retrace level. Now, back in the 1920s, the 50% retrace in an upward moving market was like a basket of where you buy, okay? Today, it doesn't really hold up statistically anymore. It's more of a 6.8, a break of 6.8 on the upside would actually show the market's potentially continuing. So the 50 isn't as good as it used to be way back when. I mean, it was being used as late as like 1980. And then traders abandoned it because there was a lot of false breaks, or, if you bought this, now this is a daily chart, right? So if you're using a 3-bar, you pop below the 50, you kind of closed above it, which was showing strength. You could have bought the top of this bar, 150.10. The stop loss would have to be like 148.70. It's a 200-point risk, right? But look, the marketplace really rocketed up. Once it got above the 45, it did go higher. But now look at this. Market comes up. Now, if you're not familiar with, a consolidation phase, get into my boot camp, but consolidation phase classic here. Once the market breaks through the 45, you could see it actually starting to trend down. If we just move forward, right, you can see the movement and the box itself. If I was to extend the box, if I can extend the box, let me see if I can. Let's just move the box over. Don't think there's the top right there. And now I need a new 45 after this. Let's get rid of that. Let's crunch it down. No, you notice nothing changed, right? It stayed the same. That's what the whole idea of locking it. So if you come down to the 0 point, it's not gonna be perfect. I'm just doing this real quick. Coming up to this point right there, you could see the original trend line broke. You reset the 45 again, and it acts as a good resistance, and the marketplace moves down nicely. So now you know how to do it. Now you need to come up with a system. It's a good story, but it doesn't necessarily mean it's going to make a great system. But you can make it a great system if you apply yourself and use good, like technical analysis, like triggers. Very low risk. Know that when you take the trade, you could get stopped out. Then the trade's going to reset again. You take that trade, you could get a good R multiple with it. It's not something that I personally use. I use other things. If you join my trading room, you'll see me use different type of systems that I have that I developed. But the 45, is one that I respect by him. I think it's a pretty decent, separates the Bible talk from, the 𝐿 or whatever else he was talking about. It's actually pretty neat. You could actually use it. If you're a new trader, test it. Make sure you test it. Okay. All right, so that's it for this video. I'll come up with another type of educational video for you. And remember, tomorrow we're going to have the weekly forecast for Forex, and I'll see you then. Cheers.